There are many people who say you don't need life insurance, and they're right, you don't need it. But if you don't have life insurance, then you are covering the financial risk all yourself. When you have life insurance, you are transferring your financial risk to someone else. But what should you get and how much? With all the different products from all the different companies, life insurance comes down to two types: term, which is temporary and has a lower premium, and whole life, which is permanent. It has a higher premium compared to term, but will build a savings that you can use while living. Each has its advantages and best usage. Before you settle on a type and an amount, you should complete a needs analysis. Some companies will just pull a number out of their hat and give you a suggestion based on what premium they think you'll pay. But without knowing exactly what you're covering and why, you could be settling for an amount and type that might not cover what you need or want. Too many times, people end up with something that doesn't cover their needs or fulfill what they wanted the life insurance to do. Getting the right type and amount is important so that you have the proper coverage when needed. The needs analysis can determine the best path to make sure financially devastating shortfalls don't happen, regardless of age or circumstance. There are two aspects to the needs analysis: cash needs, which can be immediate requirements, and income needs, which is an ongoing requirement. When we look at the cash needs, we see items that are straightforward: funeral or final expenses, mortgage or rental needs, debt liquidation, educational fund, childcare, and emergency fund. The other aspect in the needs analysis is income replacement. Many think their work insurance of 1 or 2 times their salary is enough, and they don't need any other insurance. Imagine you were fired and received 1 year's salary. Could you sit at home and not work for the rest of your life? How long before you would have to find a job to bring money into the household to keep it going? If you're close to retirement, then maybe you could sit at home. But if you still have, say, 20 years of work before you retire, and your salary, for example, is $100,000 a year, that is $2 million not coming into the house to provide for the family. If you can't live on 1 year's salary for the rest of your life, why would you subject your family to that hardship? In the needs analysis, there is a formula to determine an appropriate amount of coverage based on age and income. The biggest debts are temporary and can be covered with term insurance. This is a rental type, providing a very large benefit for a small premium for a specific time frame. This type of insurance is good to cover income replacement, as well as mortgage, education, and childcare needs, because all of these are temporary large financial debts that are usually gone or substantially reduced by retirement. The other items on the list, funeral, emergency fund, and especially retirement income, are perfect for whole life insurance. Unfortunately, we don't live forever, but most of the time we outlive the term insurance, as it usually expires or is canceled around the age of 70. Having whole life coverage for a funeral in later years makes sure the family has easy access to funds. Even though you may have lots of money in savings or investments, having a whole life policy provides funds for the family to pay bills, taxes, and debts while the estate is being cleared. The money may be in the estate, but it might not be available quickly. That's a burden life insurance can alleviate. Reallocating a little of your funds to include life insurance can provide quick access to a tax-free pool of money that can make life for your family much less stressful. Your wants should also be included in the needs analysis. You might ask, if I don't need life insurance, why would I want it? Structured properly, the whole life policy can create cash flow wealth that can free up room for better investing, lower taxes, retirement income, and wealth creation. This is a different way of using life insurance most people don't think of. You can use the cash flow in your whole life policy to start a business, cover debts, buy large or small ticket items, supplement or even create a retirement income, and permanent life insurance can also create generational wealth. Life insurance isn't just for the survivor. It can also be for what you want while you're living, regardless of your age. This is something the wealthy learn early in life. So how is the needs analysis created? All of your financial needs are taken into account and added up. Then any current life insurance you have, as well as any assets you might want to use, are subtracted to reduce the overall need. The final line shows your total shortfall or surplus. For most people, the shortfall is a lot more than they thought. The last piece to consider is your budget. This is a big factor in determining the amount of insurance to purchase. But remember, if you think that you can't afford life insurance to cover the need, think about what would happen if you didn't have the coverage. Knowing what your needs are can help put a plan in place. You don't have to cover everything, but having at least some coverage can provide peace of mind. When you work with your field agent and complete the needs analysis, you can structure a financial plan to have less stress and less worry for your family's well-being and for your financial needs and wants while you're still living. A needs analysis done properly can help you leverage and live your life insurance.